Alright then, good morning everyone, as we are a few minutes into European trade on Tuesday the 10th of October. Now, unless you've been living under a rock for the last number of days, you will have heard or read somewhere, I would imagine, about the kind of turmoil across in the Middle East between Palestine and Israel. Obviously, they've had conflict for numerous years, for many years, and that extremely escalated over the course of the weekend, with missiles being fired from both sides. But we got to kind of look at what that does for markets. Now, in terms of that kind of conflict by itself, there's a few gaps. I mean, we saw a bit of stock downside at the open yesterday. We saw a bit of oil upside at the open yesterday. But in terms of that particular conflict, it doesn't impact markets too much. Now, there was an oil terminal shut down in Israel, which is a reason for oil popping up kind of 4 or 5% on the open yesterday. There was rumours overnight of Iran potentially being involved. Now, if that was to prove correct and that was to prove true and Iran were involved, that would likely bring about fresh economic sanctions from the US on Iranian oil, which have been in place in the past, and obviously fresh sanctions on a massively oil rich nation obviously is a boost for the price of oil. Now, if that was to happen, obviously we can look towards the price of oil, but as I said, the actual conflict itself probably doesn't shake up markets too much in the medium term, you would imagine. I mean, they're not exactly kind of economic powerhouses like say the US would be, or Europe or the UK or even Russia when Russia first started. So it's certainly not on the same scale as the Russia and Ukraine war when that first started out. But obviously it's terrible what's going on, from both sides as well. You don't want, no death is good death. So you hope that they can get it somewhat resolved at some point, but haven't managed to for many years. So maybe it's a little bit tricky for that going forward. But I'm not going to comment too much on it, as we do need to look at the reaction in markets and what we do expect for financial markets going forward, which obviously was a gap higher on oil, bit of downside in stocks. Really, it did not materialize into much post open yesterday. A bit of upside in gold as well, while I think about it. We'll have a look at some charts now in a minute and see what we think, and see if there's any escalation over the next few days, if any other nations get involved, as that may influence the price of some financial assets. But if you are a trader of the Israeli shekel, which is obviously the currency in Israel, you can see Bank of Israel sell up to $30 billion of forex to stabilize the shekel, selling $30 billion of foreign currency to then purchase their own currency to prop up the price. Of their own currency. You can see the attack on Israel boost appeal of gold, safe haven assets. So things like gold, the Japanese yen not got too much upside. Maybe a bit of a look at where dollar yen is and some potential for some intervention in and around there. Yeah, I mean, I know some downside in dollar yen, which would be some upside in Japanese yen, would be kind of welcomed, you'd imagine, from the Bank of Japan. So you kind of look towards your other currencies like the Swiss franc or US dollar, which are relatively positive on the day so far. Other things like bonds, you saw bonds purchased in yesterday's session as well. So safe haven assets, are they likely to continue? Obviously that remains to be seen, but probably wouldn't want to jump in the way of them, certainly as we get a bit more information out of the Middle East to see what actually is going on. But investors on guard for oil price spike amid Middle East turmoil, so we do need to watch the price of oil. Does that spike higher? Obviously, what effect does that have on on inflation moving forward? If oil gets above $100 a barrel, that is not good for the price of oil. We can see stocks relatively flat across the US. European stocks, pretty strong across the overnight session, coming into the European trade. Up nearly 1% across the board. The Nikkei up 2.3%. Apart from that, other stock index is relatively flat. You can see oil down slightly at a big price spike, or a big spike in the price yesterday. Gold at a big spike in the price yesterday. They have reversed some of those gains in the overnight session, but we will have a look at some charts as and when we get around to it. Bonds purchased off the back of a bit of a safe haven appeal, which is then yields lower. You can see the US dollar and the Swiss franc higher. Now the US dollar would normally be lower in line with yields, but shows you it's a bit of a safe haven play with bonds being purchased, the dollar being purchased as well, and the Swiss franc up with it. The Japanese yen lower across the board, nobody really seems to want to buy the Japanese yen at any point at the moment. So we'll leave that one out. But your Aussie and Kiwi down, but I mean, there's not really massive moves across FX land. I mean, looking at down the percentages, bar the Japanese yen, nothing really is moving up too much or down too much. So relatively quiet across FX in today's European session so far. Now, if we have a look at this, you can see Fed's Jefferson's speech yesterday seemingly pushing back on the fact that the US may need to hike interest rates again, which I think is interesting. You know, you'd have to imagine US dollar would be lower across the board off comments like that. Once you take out, obviously, the situation that in the Middle East that has sparked a bit of a safe haven play to begin the week. It did mention that interest rates in the US may have peaked, and the fact that the US 10-year yield has rallied to the place that it has rallied is potentially even enough for the Fed to not hike interest rates again. You know, with a lot of, say, US mortgages, for example, being based off the 10-year yield, with a lot of loans within the economy being based off of the 10-year yield, the fact that rises, you know, with a percentage rise in the 10-year yield, it can cause an effect throughout the economy of more than 1% in the federal funds rate if they were to hike interest rates. So, you know, US yields reaching where they are is maybe enough for the US to look at stopping hiking interest rates. But off the back of a strong NFP print on Friday, couple that with a massive safe haven play in yesterday's session, it's come down from 4.885 down to 4.63630, which is a substantial move lower in the 10-year yield. The 2-year had the same reaction, bit of downside off the back of NFP, and then a bit of downside, which is obviously upside on bonds over the course of yesterday's trading session. The S&P, big gap lower, and then popped higher, which kind of shows you what stocks think. Doesn't really affect kind of business conditions too much as of yet. So stocks did push higher off the back of it. We have a look here. You can see stocks big gap lower, as you can see, across the board, across the S&P, the Dow, the Nasdaq, and the Russell. Gap lower on the DAX. You can actually see the candlestick though, but that is still a gap on the DAX, on the Euro stocks, and the FTSE all pushing lower at the open on Sunday night. Then they have pushed higher into yesterday's session. So the S&P filling that gap and pushing on higher. The Dow Jones the same, the Nasdaq and the Russell all the same. The DAX pushing higher in yesterday's session into the close, but a solid upside over the first 15 minutes of European trade today. So it kind of shows you what stock markets think of it. It shows you they're not too concerned about kind of global business conditions off the back of this just yet. If more countries get involved, that may change. But for now, stocks kind of shrugging off that type of risk. US dollar a bit of a pop higher. You can see your pop lower. Sorry, your Aussie and your Kiwi popping higher. Euro had a bit of a gap lower at the open, but has reversed, or did reverse all of those losses. Cable pushing higher in yesterday's session as well. So a bit of US dollar weakness yesterday's session, bit of US dollar strength in today's session. Yields having a bit of a bounce back. So they just counter moves to the move yesterday. So no clear follow through in today's session across the US dollar and across yields as we begin European trade today. So market's a bit undecided, a bit unsure as to what it wants to do as this conflict continues and worsens over the course of the last couple of days. In terms of where you take markets off the back of this, it's a little bit tricky to work out some clear cut direction. You know, yields lower and then pushing higher in today's session. I can see stocks pushing higher. You know, oil, bar the big spike higher yesterday, hasn't really managed to sustain much upside in today's session and over the course of yesterday's session. You know, as you can see, what's that? You know, look at the gap, you know, from the low to the high. You know, nearly a 5% gap, 4.5% gap, and it hasn't really moved above that. Did kind of close where it opened yesterday, and now is making an attempt lower. So as I said, difficult to work out direction. Oil giving back some of the gains, or should I say gold giving back some of the gains from yesterday. Now markets not getting the follow through that you may expect after massive gaps like that. It shows your markets a little bit undecided as we head towards CPI a little bit later on in the week. So kind of looking at this, you've got to take the Middle East conflict into consideration, what that means for markets going forward. You know, you'd expect oil prices to continue pushing higher if it was to be a long-lasting effect. That's not what we've seen just yet. if it proves correct that Iran have got involved, that will likely involve fresh sanctions placed on Iran. We have absolutely no confirmation of that. It's just reports in the financial news sources looking at a possibility of that being the case, but as of now, no confirmation on that, so nothing we can really act on just yet. But as I said, equities pushing higher, maybe somewhat surprisingly, but shows you that they're not too concerned of it. The equity markets, dollar lower yesterday, higher today. Yields the same, lower yesterday, higher today. That's the probably, I say that's probably the side of the fence you want to sit on. Dollars higher in today's session. But then you look at comments from Fed's Jefferson yesterday. Interest rates may have peaked, and the 10-year yield might do the job for the Fed. So markets a little bit all over the place at the moment. Not the easiest of market conditions this morning. Maybe it's a morning to keep the money in your back pocket and wait for some fresh information to go and act off. In terms of fresh economic data out this afternoon, we've got a few speeches from some Fed officials a little bit later on, as and when we enter the US session a little bit later on. But some industrial production figures out of Italy. Can't imagine markets will look at them or look at those figures with any sort of intent, as we've got bigger fish to fry at the moment. But economic calendar quiet to begin the week, certainly not a quiet beginning to the week. And on the geopolitical front, economic calendar will pick up as we get on to the back end of this week, where we got CPI out of the US on Thursday, we got CPI out of China on Friday. So we'll cross that bridge when it comes to it a little bit later on in the week. But for now, geopolitical tensions, what we need to keep an eye on. Where markets want to go off the back of that is a little bit difficult to try and wrap your head around at the moment.